everyone. Thank you so much for attending Finance Friday. I'm with Michael Holden for today. We're going to be talking about forbearance, keeping it really general, but giving you some more information. We'll get started in just a few minutes. And if you have any questions throughout, don't hesitate to ask. Feel free to put them in the Q&A and we can answer them as we go to make sure we're getting all of your questions answered. And then we can also save some until the end if there are some larger questions. So Michael, if you wanted to take it away, we can get started.
Awesome. Good afternoon, everybody. I can't see everybody's faces. Let me jump and see if I can get the screens going. But it's great to have everybody here. Let's do this. What I'll do, can everybody hear me okay and see me okay? Maybe just a hands up or in the chat room, put a heck yes or a yes.
They can hear you. I see them putting their hands up.
Okay, awesome. Thank you, guys. So what I'm going to do today, first I'll just give a little introduction about myself, talk about what I do. Forbearance is kind of a sticky subject, and subject meaning you don't want to really give people advice or direction on it because every bank, every lender, every circumstance is different. So what we want to do today is just define it, show you how it works, and then have a Q&A on some specific examples. But I thought it'd be good to have open discussions, not only what we're seeing and some statistics that are out in the marketplace, but things you guys can keep an update on and keep an eye out for any of your buyers, any of your listings, things in that regard, because forbearance isn't a new term. It's been around since the crash from before, but now people are using it for different situations regarding COVID and the shelter in place. Okay, so what I'm going to do first is I'm going to share my screen here. Let me make sure I can do all of this. And what we're going to do is get you guys on screen too. And what I'm going to do is not only will I have a slide for you guys, but we have a link that we actually send people if you want to Google it, or if you're a client of ours already. It's a servicing issue as it relates to a forbearance. So what we do is try and not make it part of our discussion from a financing piece, but definitely give somebody direction as to where they can go if they need to have that set. Okay, so if you look at my screen, and I would recommend anybody else, if they have a current loan, if you have a client that has a loan, or if you want to go through this process, every bank, every mortgage broker, every mortgage bank, which I am, should have a COVID-19 or a shelter-in-place resource. And all of this in forbearance terms on how we relate to it today is all related to the CARES Act. And the CARES Act is what was implemented last year in 2020, and it relates to a lot of the things dictating financing. Okay, so on here, what we're doing is giving a helpful tool as who to contact and where to contact if you need something. And then from that, on the servicing piece, you can actually go into, that specific scenario. So I hate to be, I'll kind of dummy it down from the term itself, and then what we'll do is I'll show you where it's popping up, not only on my side on the financing side of the house, but also what you may want to look for if you've got buyers. You may want to have a generic conversation with somebody, or you may have a listing and you may want to have a conversation about potential buyers coming to buy your listing or the actual person you're selling the home for. Okay, so before we jump into that, a little bit about myself. I got into the mortgage business in 2007, if you can believe that. If most of you were in the business or doing real estate in 2007, as I understand it now, it was not a good time to get into the mortgage business. People were apparently not happy with values and the world was crashing around us, but I didn't have any clue because I was a tech VP for about 15 years here in Silicon Valley. And I took a couple years off and started having kids. And when I started having kids at my age, I said, where do people work that can work till they're 100 years old? And at that time in 2007, 2006, 2007, I looked around and it was mostly bankers and politicians where I looked around and saw people that looked like they had been working till they were 100 or could work till they were 100. So at that time, we didn't have any crazy politicians like we just went through, good, bad, or indifferent. So I focused my attentions on banking. And by doing that, some friends of mine had started a company here from Silicon Valley up in Placer County, Roseville, called Paramount Equity Mortgage. So I moved up there on a wing and a prayer. My wife, a baby in tow and one on the way, and dove into real estate and mortgage financing and mortgage banking. So if you remember 07 to 2010, 11, whenever you guys define as the crash, I was jumping into the mortgage business. Didn't even know what a mortgage was. But I learned very quickly because the transactions I were dealing with were all 100% financing, bank owned, short sale, 115% financing, stated income, stated asset, if we all wish those loans could come back, FHA, VA, USDA, and was doing about 20 to 25 loans a month in 200 to 600K loan increments. So got very good, very fast on unique kind of lending, and then spent about 2 years there and was recruited out by Wells Fargo, and then came back to Los Gatos to do Wells Fargo private mortgage banking for 10 years. Okay, so I have the big bank experience, I have the broker experience, and now with Academy, I'm a mortgage bank, which is kind of a hybrid of both. We can originate fund loans and service loans, but we can also broker out if there's something unique that somebody needs. Okay, so the topic of forbearance has been something I've been very involved with, because forbearance originally started back when people couldn't make their payments back in the days when things started to crash. So it's not a new term is what I mentioned, but it is a term that people used and started using pretty heavily once we kind of went on lockdown and went into COVID-19 and the CARES Act. So forbearance in its simplest term is really just the ability for somebody, or in its, if you take its most generic form, it literally just means an extension of time for making loan payments or the acceptance of smaller payments than were previously scheduled to prevent a borrower from defaulting on his or payment obligations. Okay, so in its generic Wikipedia, Webster's dictionary term, that's really just what it means. Now, how people handle forbearance can be specific to each individual lender, each individual loan, or each individual program. If you've heard the terms conventional, conforming, FHA, jumbo, portfolio, and so forth. So what I want to do is be very careful not to talk about how forbearance works or specifics of it, because you could talk to 10 people and have 10 different forms or setups of a forbearance. Okay. So any questions on that? Is that making sense up to this point? I hope so. All good. So
we're good so far. No Q&A
right.
questions just yet.
Nobody handling it yet. So stop me if I'm running on and somebody has a quick question. But what forbearance means, and from that basic statement, it means somebody's having trouble to make their payments. Now, what we've seen a lot of is big banks, all kinds of people handing out the forbearance to help people and kind of defer a payment. The standard one, or the generic one that I've seen, is, hey, you don't have to make your payments for 3 months, just sign these pieces of paper. I've seen a lot of people get into that, and then they come to redo a new loan or qualify for a new purchase, and they didn't realize that a forbearance means that they didn't or weren't able to make the payments on their existing loan. So in pretty common sense, if you come to a new lender and you want to qualify for a new loan and you couldn't make your payments on the old loan, even though the intent wasn't there, it was just a nice convenience, it's pretty hard to get a loan, if getting one at all. Okay. So again, you really want to have a conversation with your clients. I don't want to talk about what type of conversation, But what I did on the email earlier, and Malia, I think they sent it out before the conversation. One of the other big things that's happening right now as of March 1st in the lending business is the new URLA, or Uniform Residential Loan Application, is now industry-wide as of March 1st. Okay. And what that is the 1003, if you've heard that term, but it's basically any application you're going to do to take a mortgage, right? Required by law. That went from about 5 pages to about 9 pages. So I sent everybody a copy of that for your records. Take a look at that if you've got 5 minutes or a glass of wine before bedtime, and go through that, because if a client has that completely filled out and all of it's accurate and verifiable, that's all it takes to get a loan. Okay, so it's about 9 pages of information. Not that you have to go through that with your client. We do that as originators and as lenders to do financing, but there's some great information on there. And if you ask yourself, if I knew this much about each one of my borrowers or each one of my listings or each one of my buyers, you'd know everything you'd need to know to get a loan. Again, if it's verifiable, right? Anybody can fill out a form or fill out an application. We still have to go through the process of verifying it and making sure it's correct. So we'll make sure you get a copy of that for your records. Again, you can Google it. It's the URLA, or 1003. And again, that's the basic application. And the reason I ask that, or if you're familiar with that, is if you're not familiar with lending, or you've got a history with lending, all the new rules and regulations from the crash kicked in about 2015. So everything that happened in 07, 010, 2011, when I was learning the business, there's now rules and regulations in place to hopefully not have that happen again. Okay. And the key ingredient on that is, does your customer or does your buyer have the ability to repay a loan? Okay. So when we do an application or we do a loan, at the beginning of the transaction, we run every single applicant, borrower, co-borrower, parent, anybody that's going to be on that mortgage loan, we run them through TSA. As crazy as it sounds, we have to make sure they're not opening up a terrorist cell or buying something in that regard. We run them through both state and federal for taxes, child support, liens, any type of thing that would pop up. We also run them through title. And for title, the reason we do that is to make sure we're calculating their income versus their liabilities. So we needed a whole new payoff at the end of that 3 months. So think about that. If somebody got into forbearance and couldn't make their payment for a month and stretched it out 3 months, some of these you read the small print and they're saying, well, guess what? Your 3 payments are due all at once in a balloon payment in month 4, which you guys and gals can understand that may not be very doable. If they couldn't make the first payment, what would make you think they can make 4 payments in 4 months? So what it's been creating is another volatile market that you as realtors may come across because of either an ability not to be able to make their payments, or not having a client be able to qualify to buy one of your listings because they're currently in forbearance. Okay, does that make sense? Has anybody got any examples or heard any stories about forbearance similar to what we just talked about?
Yes, we have one question in the Q&A.
Okay.
So it says, what are the changes in information required in the URLA versus the old one, other than the number of pages?
Got it. So what they're doing now is there's a lot more in-depth information about length of term at work. They're separating each borrower out, where you had a borrower and a co-borrower. Now each individual borrower fills one out on their own. In California, which affects everybody on this call, I'm assuming, remember we're in a community property state as well, which means they could deep dive with a few more questions, both specific to, are you aware of community property state? Are you both aware you're applying for credit jointly, not jointly? So nothing's really changed other except expanding on a few more questions and making those questions mandatory before we can submit to an actual underwrite. Okay. There's usually 7 pieces of information we have to make it a real deal or something that we would send to an underwriter. And that includes their income and what type of loan they're applying for, their job, their information, obviously public and private information. So it's the same items. It's just expanded on the criteria quite a bit. And they've tried to make the form similar to, for everybody who's done a transaction out there, you've seen the new loan estimate, which is called the LE, which used to be the old good faith estimate. We're required to get that to somebody within 3 days of pulling someone's credit. And then we work from the loan estimate to the finish line all the way until we get to the closing disclosure. So what they've tried to do across the federal, all 50 states, is make those 3 forms compatible so that the borrower understands what they're doing in the beginning to what they're getting at the finish line. Okay. So again, the system and the process hasn't really changed. It's really just set up to where we're asking 5 more times. Are you sure you're aware of the loan you're getting into? Are you sure of the process of how we do this? Are you sure we verified your income, your assets, and your liabilities? Okay. Did that answer, I hope?
Yes. Would you be able to put the 7 required documents in the chat afterwards, or you can send them to me and I'm happy to send them out to everyone as well?
Absolutely. And that's on the URLA. It actually talks about what items you fill out in each section. So absolutely, I'll attach that as well. Okay.
Thank you.
Yep. So next steps I just wanted to go into is kind of what we're seeing from a forbearance perspective. So to give you an idea, again, if you're all familiar, we've got county loan limits, which are considered conventional conforming loans. And those are going to be any government related loans, USDA, VA, FHA, down payment assistance programs. Every county in the US, but mainly for us here in California, has been broken down and they have county loan limits. Those have all increased at the beginning of this year up to about 822,500. So if you have a loan amount, and that's a single unit, it goes up to almost $1.5 million if you go up to a fourplex. Anything after a fourplex is no longer residential real estate, it's now commercial lending. For food for thought on that. So if your loan amount is under that 822 and it is a conventional conforming loan amount, hopefully everybody's heard the term Fannie and Freddie. Fannie and Freddie has a requirement of a loan in deferment or a loan in forbearance, how you handle that and what we can lend to. Okay. So most lenders each have their specific requirements, but there's some hardcore stops to where if somebody's in forbearance, they're not going to get a new loan unless it's remedied. Remedied meaning it's closed out and then it's been 3 months since they've been making payments on time, or it's completely absolved and the loan's been paid off. If you sold the home or something in that regard and now your client wanted to go buy a new home and you had their listing, then you could do that. You couldn't have that completed until it was absolved or taken off your liability or credit report. Okay. So real quick on the screen, I'm going to show you now, if you haven't seen a credit report, this is an example and you can see an example on this. If you haven't seen a copy of your credit, you can Google this, you can see something, but can everybody see that? Okay. It's kind of blurry, but you don't need to see the exact numbers. But what
We
I'll read,
only can see your web browser screen. We can't see your the report.
oh, you can't see the report on there?
We can't.
All right, let me jump back onto share screen and get the right one on there.
No problem. And
So
then when
bear
we have
with
a
me.
break, we have another question for you as well.
Yep, absolutely. All right, so let me fix my, who would have thunk I was in technology for 15 years? I can't flip screens. Okay, can you guys and gals see that one where it's got a yellow highlighted area there?
Perfect.
Awesome. Okay, did you want to do a question before I jump in?
That sounds great.
Okay.
So one question through the Q&A was, can buyers in forbearance refinance? Can they qualify for a loan to purchase a home if they are currently in forbearance on another mortgage?
Good question.
And then there's I don't know if it's a follow-up, but it's from the same person, is, are people receiving pandemic unemployment assistance eligible to refinance and or to get a loan to buy a home?
Two very good questions. So if you can think about a lender in its generic form, all of the new rules and regulations that kicked in 2015, all the different acts, all the RESPA, TILA. I don't want to bore everyone with all these acronyms on all the new laws and what passed, but basically it switched from, in the old days, they used to loan on the collateral or the piece of property, and then you could get a loan, stated income, stated asset, full doc, whatever you wanted to do. As of 2015 moving forward, the term and that everybody refers to in the lending business, unless you do hard money or private money, whatever you want to call it, it's all based on your ability to repay. Okay. So what the lender's going to look at is 2 years history of your income, how much you have in assets needed for the actual transaction. And then they try and forecast 3 years moving forward. And they do that by looking at your income and your job stability, how much you make, how much they think you're going to make. The credit report, remember, they're always going to pull a tri-merge, which is going to include all three bureaus. Most lenders take the high bureau and drop it, and the low bureau and drop it and use that mid FICO score. If you look at somebody's credit report, you can kind of get a history of how people have paid things back in conjunction with how they're going to pay things moving forward. Because a credit report is going to give you 10 years history of how they've paid things and how they've managed credit. It doesn't affect them after 2 or 3 years, but it has a 10-year history. So anything that's occurred from a finance or a credit perspective, we get an idea 10 years back, but you can really look at somebody's credit, and if they've had a hiccup or a divorce or a financial situation, a loss of job, you usually can see that in how it affects credit. To your questions, can we give loans on that? The answer is we can take the application and try, but if they're on unemployment, it's very rare they're going to have the ability to repay or qualify for a new loan because of the instability of what that unemployment is. So we're never going to turn someone away from taking an application, but you do have to have the ability to repay, and there's that term again, to qualify for a loan. Okay. There's a million different triggers and things that we look at, but to the other part of your question, if a person is in forbearance, can they do a refi or purchase a new home? Again, everybody's going to have different qualifications, but the answer is you can try, but the word forbearance is really not it's not a negative. It's not going to affect your credit, but in its purest form and how it posts on your credit report, that's basically a statement saying you couldn't meet the terms and conditions of the old loan. So getting a new loan, as you can see, would be relatively difficult if you couldn't meet the terms and conditions of your old 30-year loan or 40-year loan or whatever you had. Okay? All right. So I hope that answered the question. And again, there's a million of these. We could do 2 days of this if you wanted to. I'd put you to sleep. But what I want to do is try and give you just the fundamental basics and overview. And then with you out on your side, obviously you're not going to do the financing for people, but these are great basic questions you can ask somebody and really get to know your client without being offensive or helping them to kind of go around what they need to do to be ready. So I apologize for this being blurry, But really, the only thing I wanted you to see is what a credit report from one of the three bureaus looks like. The highlighted part on here, I'm just going to read to you what it states. It says, affected by natural or declared disaster, conventional real estate loan, including purchase money first Fannie Mae account. Okay? So what it's doing here, and I've seen 6 or 7 different terminologies, depending on who's posting. Remember, you've got Equifax, Experian, and TransUnion, but it's going to say something that flags us to know that they're either in forbearance, or they might be in a modification, they might be in default. It could be a number of different things. That's a whole different discussion. But what happens is, if you look up in this right-hand corner, 30 to 59, so those are your mortgage lates if they had one, 60 to 89, and then 90 plus, okay? Anytime somebody has a 90-day late, you go into what's called NOD, or notice of default. Okay, this one's perfectly clear, but the reason they highlighted this for a picture was to show you it's flagged on your credit report, but it doesn't affect your scores. Okay, so this person in the example has an 800 FICO, but they're in forbearance. Okay, there was a lot of lenders sending out things and said, hey, just sign these papers and you don't have to pay for 3 months. And they didn't think about, am I going to go buy a new place? Am I going to refi with the rates, excuse me, as low as they've been? And unfortunately, that's hindered a few people of doing what they want to do. Okay, so right underneath this on the forbearance, you can see these are the generic things that come from Fannie right off their website as to the requirements of where they need to be. Okay, so most of these are basically saying if the client's in forbearance, it needs to be remedied before you can move forward. And that is no different for purchase, refinance, or anything else. Okay, so again, back to that great question you had before, you definitely want to have that conversation. Even if it's a listing or a buyer, you want to make sure that the lender you're using has already put them through that experience. I'll give you an example for me. I'm not legally or ethically allowed to issue somebody a pre-approval letter unless I've pulled their tri-merge report and seen all 3 bureaus, and I've got all their information to support the transaction that they want to do, right? So I've pulled their credit, I've gotten all their last 2 years income documents, and then all their asset statements, 401k, stock, savings accounts, CDs, IRAs, whatever they may want to use. I try and gather as much of that up front so that when I hand a realtor a pre-approval letter, you can feel confident that I've been through that exercise and seen everything up front, so that we know we're not going to get hit middle of the escrow and all of a sudden they don't qualify. And in today's market, there's so many non-contingent offers. We want to make sure that the customer has the best shot ability to finish that transaction without having any cost associated, or lost earnest money, or paying for an appraisal, but they would have never made it done because they never qualified from the loan itself. Okay, so again, forbearance has been used recently quite extensively as kind of a convenience. The people who need it badly, and it may be a red flag or something, not only to help out, it may be an indicator for you to maybe give them a solution as a listing or a sale of a home, which is, I think, for everybody in this market, who wouldn't want more inventory, right? Okay, the other thing I was going to give you is just some generic stats, just to kind of give you an idea of what's going on out there. And these numbers change weekly, daily, they fluctuate up and down. By the time we have statistics, they're usually about 2 weeks to a month behind, but it kind of goes in consistent patterns with what you're familiar with on your markets. I think the last number, I did a presentation on Tuesday, and the last number on forbearance was that there's roughly 5 million people in forbearance, give or take. And that was from about 2 weeks ago. And they were forecasting that that number was going up. Okay. And the reason they were forecasting that it may be going up is because there were a lot of other items that were just happening right now. And again, a whole nother topic. I don't want to go off topic, but evictions. You're not allowed to evict anybody until the end of June or July. Now, it was going to expire at the end of February 28th, but they extended that out with the new administration to try and help out and people with forbearance. So I'm talking to a lot of realtors right now that are having those conversations with people that truly might be at issue, and then picking up homes and not doing a short sale because the values are all there, but really helping somebody list a home or get out of a home if it's become too much from a job loss or something else in that kind of situation for the person individually. Okay.
We have a question in the Q&A for you.
Yeah.
So it says, after client has opted out from the forbearance program, how long will the record affect their credit report or mortgage loan application in the future?
Got it. So affect it from a credit score. If it's been remedied and they did whatever their term and condition of their forbearance was, it will have zero effect or impact on their credit score. Okay. So it's not something there as a negative connotation or it's bad if it's remedied. The term from the CARES Act, CARES, which is really the major first government help program that was last year in 2020, the CARES Act, they made sure that it wouldn't affect your credit one iota. It will stay on your credit for 10 years, meaning once it's posted, it's posted. But affecting your credit score or your FICO or your number, per the CARES Act, it should have zero effect from a reduction or a hit or something negative. It's just a notification on the report. No different than if you had an issue or some event on your credit report 7 or 8 years ago. It's still posted. It drops off after 10, but it doesn't affect you at all if you've met the terms and conditions. Okay. To that question, a good follow-up on that one that I had a personal experience with. A lot of lenders, and again, it's separate for each, but one personal one that I had is they got out of it and then they put the forbearance or the monies that were owed on those 4 payments or 3 payments, they put it on the back end of the loan and they assumed that would take care of it. Well, it doesn't affect the credit or anything else and they're still in good standing, but on your credit report, they're still in forbearance. So getting a new loan or refinancing is going to be, I want to say extremely, extremely difficult because you're still in forbearance. Okay. So a good rule of thumb that I've heard, and that what they've sent out on some of the letters is you want to have your forbearance remedied, meaning brought back current or removed, and you've made 3 consecutive payments in good standing. And then it's business as usual for anybody that's moving forward. Okay. So now do you guys see these, Malia, can you see the San Francisco screen or are you still in the other one I've got?
I see the San Francisco screen now.
Oh, perfect. I didn't refinance or buy any of those houses if anybody knows.
Now I see the credit report though.
Okay, perfect. What I'm going to do now is I'm going to go back to the share screen and I'm going to show one more item and then make sure you guys can talk to that. And then what we'll do is I've got open questions or anything else related to it specifically, we can deep dive into as well. Okay, so bear with me one sec. All right, so that should stop share. And then I'm going to switch over to one more screen. And make sure everybody can see this one as well. Okay, are we back up on the COVID-19 resources?
We are.
Okay, thank you, Malia. Again, what I want you to do and what I try and do with all the realtors I have, because I know everybody has a different lender, a mortgage broker, Some people, clients only use Chase, some clients only use Wells Fargo, B of A, Citibank, et cetera. So I try and keep up. I have a weekly meeting with an individual from most of the big banks. And then myself as a mortgage banker, if you're familiar with the term, we do about $1.5 billion a month in originations. We're very similar to like a Quicken Loans, a Loan Depot. So we can originate, service, and carry the loans and fund the loans. So we're a rung above a mortgage broker, but if we need to do anything, we can contract out for unique loans like bank statement programs, interest only programs, stuff that the Chase, Wells Fargo, and all the ones we do in-house or as a correspondent lender won't touch. So what I would recommend on forbearance, just in its simple 5 steps that you want to make sure you know, and how it relates to you as realtors with your clients as either a buyer or a seller, is have that conversation with them. The 2 things I ask my borrowers right out of the gate, because they sometimes don't show up until they may have just gotten into a forbearance, they may have just gotten into my self-employed borrowers, another big red flag, and again, not red flag negative, but you want to make sure you ask the question, is a PPP loan. So PPP loans or forbearance on their current or existing, you absolutely want to ask those questions up front. And it doesn't have to be a deep dive. Most people will answer that yes or no rather quickly, and then you can have your lender or your mortgage partnership, deep dive into it specific to make sure you're covered for your transaction. But you always want to make sure and ask that question up front, because those are things that might not show up until after you're in contract, which could be a headache for you guys and gals if it's a non-contingent offer, or you want to open your escrow and close it at the end of that 30 days and move on to the next one. So definitely make sure you ask those questions. The other part is, if they tell you that they are in that, have a quick solution for them. So we've got a web page that I send somebody to immediately. If I'm face-to-face people, I used to hand out handouts, and you could have handouts and people would pass them around and do so forth. So rather than say, hey, here's the only way to do it, every lender is required by law to have these, have them posted, and have them related to their NMLS ID number. I'm licensed just like you guys are with my NMLS ID. So we have to make sure it's posted, it's easy access, and it's super understandable. Now, if it's a specific case-by-case item, that's where we don't go into detail. We find out who's doing it, who's handling it, and direct them to the best resource for their specific circumstance, right? Somebody else can't handle somebody else's forbearance. They're always going to get the best advice, the best support, and the best resolution from whoever is handling that current note now. Okay, so I can't come in and fix somebody else's forbearance. I can't give them advice on how to fix it. I can't show them how to fix it. I can just tell them and say, hey, call your servicing arm, your 1-800 number. Hey, get on your website if it's a Wells Fargo loan. Hey, get on Chase if it's a Chase loan. So we try and kill them with kindness and then steer them in the right direction, and then we move forward. Okay, and then last thing that I always try and talk my realtors in, because I know inventory is so bad, especially here in Santa Clara County, and I don't know where this list is or who has it, or if somebody does has it, they've got the golden egg. But there's a lot of customers out there and a lot of clients and a lot of people who are in trouble because of the impact that this whole COVID-19 and shelter in place has had. And, I don't want to make light of those situations, but you as solution providers can come in and be the superheroes and take that burden off their back. Very similar to the people who have been doing this long enough to remember the short sales or the bank owned or things in that regard. The nice part is now, from that disaster we had in 07, and it didn't start because I got in the business, but what happened is all of those things that we learned in 07 to 10 and 11 in the crash, those are now in place to help people out.
Michael, quick question for you.
Yeah.
Are you intending to show the web page, or are you intending to show slides?
No, it's just the web page.
Okay, perfect. Thank you. That was a question in the chat.
My slides are the web page, so it's a link.
Great.
So I'll send out the link and you can go to it and pull anything you want. The slides are generic that are specific to one thing. But again, that's why I'm talking to the point of there's no end all be all solution. Wells has their solution. Chase has their solution. They're all relatively off the same format and guideline from the CARES Act, but each person has their own little flavor, their own little color, their own little logo, things like that. And that's why you want to be specific to your specific client, both buyers and sellers, right? Because if they're already dealing with somebody, rather than to confuse the issue, you want to keep them with that person to resolve that issue. If they don't have somebody, or they don't have a relationship with a banker or a mortgage person, and they just need help, heck, send them to me. I'm on the phone 24/7 and can answer any questions and do the best we can. But when I do these presentations and so forth, I try and make it as generic as possible so that anybody can reference it or use the same thing. Okay? So that pretty much is the majority of what I've got. Again, forbearance is something that's not new, but it's something that's being used in a different format than what it was originally created for. But it's being used, and for the people who do need it, it is absolutely a savior to buy them more time. If that 3-month period or that solution that their provider gave them didn't fix it, or they're still having trouble, I would say that's the next step. You guys and gals would step in and try and remedy it with a potential sale. So thank you guys. Questions? I can stay as long as you guys want. If anybody has specific questions, I can answer.
Yeah, there's one more in the chat if you're ready for it.
Yeah, shoot.
So it says, does PUA affect purchase house loan?
PUA.
I think it's pandemic unemployment assistance.
Got it. Yes. I don't think anybody's going to be able to qualify through unemployment. So if somebody's on unemployment for a month, 2 months, 3 months, I'm not familiar with anybody that can get a loan with unemployment assistance. When you jump into a new home, the standard requirement we have, and most lenders do have, for a purchase, somebody starting a new job, somebody coming from unemployment to a new job, transferring jobs, usually what we need is the offer letter or the employment date of application when they're going to start, and we need the first pay stub. Okay? So we'll still look at their 2-year history, but let's say they had 6 months or so from unemployment and then they found a new job and we're going to start. That's understandable. And then we would qualify them on that new offer or that new position and then wait for that first check to get in there based on what their new compensation was going to be.
Perfect. So there are no other questions in the Q&A. If anyone has any last questions for Michael, feel free to drop them in. But if not, again, we thank you so much for joining us for Finance Friday. We really appreciate it. And as Michael stated, once he sends out the links to me, I'll be more than happy to send them out to everyone who registered for the session so that you have everything he was speaking upon today.
Awesome. And then Malia, do you know if they were sent out the new URLA form, the 1003? And again,
I don't believe so.
Okay, I'll resend that to you as well. But again, Perfect. That's not Mike Houghton Academy Mortgage. That's every lender that does a loan has to use that form. And that was supposed to be November of last year. It now has been moved, and the mandate was that everybody as of March 1st is using this new form. So there's not a
Okay,
lender
great.
out there that's not using this form with every application. And it's got some great questions on there. And again, if you know what's on there, if that's filled out correctly and you can verify, that's all we need for a loan.
Perfect. So yeah, once Michael gets that to me, I will be more than happy to share all of that information with you all. But thank you again for attending.
Yep.
And we will see you next time. Thank you, Michael.